What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market in which we are in. So, this past week, what exactly happened this past week? We started getting some big tech, or the first big tech earnings, and we've had a lot of interesting talk, rumors, discussions around interest rates. It was the last week before the Fed are coming into a blackout week, which is this week. So that is something to keep in mind. So we did get a lot of Fed members talking, which is normally what happens before they go into a blackout week before monetary policy. Now, rumor being over the past couple of weeks is that we were coming in at a 25-point basis move. So that a lot of people are expecting essentially the Fed to hit a 5% interest rate. Currently, we're sitting at 4.5, and so a lot of people are expecting two 25-point basis moves coming into this year. You have some Fed members talking that no, it's just going to be a 25-point basis move. You have other members who are saying no, it's going to be a 50. Again, some people have voting rights, some people don't in the Fed, so it's hard to really determine. Nonetheless, there's a lot of noise, and so we have to wait till actual policy to see what happens. Now, there's a lot of things to consider, and a lot of things that I talk about on this channel that I point out that you need to be considering and not just going off of random data. There was some Fed members talking on Friday, and it was kind of a lot of just jargon and misleading information, in my opinion, to try to pump the market back up. And that's kind of what we saw on Friday. We have to also understand there was big options expiration, so you got a lot of short covering. And a lot of people have been buying puts on this market. So that pump on Friday could essentially just been pure short covering, which pumped us up, which we've seen at the end, essentially after a lot of cycles, especially because people are playing the trend, like we talk about as well. So nonetheless, this week, or to finish up last week, we did have right now, so far, what we've understood is that bank earnings have been absolutely horrible. Netflix came out. Netflix earnings absolutely horrible. The only reason it was pumping was because of the amount of subscribers, essentially, that have come in. Right, they've gone from losing 1 million subscribers to gaining them back to gaining well over expected. I think they came in at like 7 million users or subscriptions or some crazy number like that. But nonetheless, the thing is with that, you have to understand people are looking for cheap entertainment. And a lot of things that we've talked about, yes, inflation is coming down. There's been a steady rate of inflation drop, but you still have to be very careful because it can shoot up very fast. And then all these expectations, these people are trying to predict, and these hopium pumps are going to get absolutely crushed as soon as inflation starts shooting back up, if it does. Now, there is a lot of other things to consider here. So Netflix, we know, did bad. First big tech. This week is going to kick off some really big earnings. But first, we need to point out and why this is an issue. As far as we know, the savings rate is being low. We know inflation is coming down. Is that wage growth, something we talked about? There's been a lot of layoffs, and we're like, okay, well, we're not expecting it. So, there is a lot of people on severance packages, and they are considered to be employed until that paycheck stops. So you have to keep that in mind. So you're going to have the numbers, and then there's a very big delay in the numbers as far as employment. So you have to understand that, and that's going to eventually play out and going to show you true numbers. Now, wage growth is roughly sitting around 4.6, and inflation is at 6.5. So you can see that wages can't even keep up with inflation, right? And this is the concern that the Fed are facing, and this is why rates have to continue to be high until that's fixed. And it's going to get a lot nastier before it gets better. Because what if inflation does decide to shoot back up? That is going to be a big cause of concern. And something to also keep in mind is the Fed is expecting roughly around 1 million job losses by the end of this year. 1 million. So there is still a lot of issues, right? This is why I talk about this going to be the year of bankruptcies, foreclosures, and everything else, because these hopium spikes, we have to understand that a lot of times there's other reasons, and especially when you get off of options expirations and stuff like that, these cycles. That's what these essentially red dotted lines are here that you're seeing in the background, because essentially that's the cycle for that option expiration. We had that on Friday, and so you could have got a lot of short covering on Friday, is what that move could have been. But nonetheless, that was essentially last week. We had that. Powell did have tested positive for COVID as well this past week. That could be a potential black swan. Again, he's at this point one of the most powerful men in the world, right? Because his words move markets, and so if something happens to him, again, obviously he's going to get the best treatment. But if something does happen with him, that's a black swan, and that could sink the markets. And considering his position and what's currently going on in the world right now, I wouldn't be surprised if the market drops 500 points on the general index. That's absolute crash right there, in my opinion, because you would essentially have to have someone else come in that people aren't really used to in that position, with such eyes and such stress on what essentially the chairman of the Federal Reserve, that position itself is a position of very, very, very high visibility, and obviously because everything is based off the dollar. So that being said, going into this week, what are we looking at? There's not a lot of really big events because we are essentially prepping for monetary policy, which will be next week. We do have core PCE on Friday, so that's going to have some weight. Again, nothing is going to be absolute pivotal until we get next week's monetary policy. Being said, we are coming into a huge week of earnings. We're starting to get into the meat and potatoes of earnings. This could potentially move the market to an extent. It could pivot the market, but ultimately understand next week is going to have essentially the overall pivot. So even if we went down, if for whatever reason the monetary policy, people like what happens with the monetary policy, it can change it. Maybe the market pushes up, but next week, the Fed are like, no, we're going 50-point basis move, then the market will be corrected. So whatever happens this week can very much be corrected by next week and what happens with monetary policy. So keep that in mind. But it's not saying some bad Microsoft earnings and BA earnings could absolutely sink the markets, right? Something I've been talking about is financials and value have been holding, or essentially keeping the market afloat until we're currently at. And so we do have BA on Wednesday. We have, again, a lot of earnings here. Again, starting off with Tuesday with Microsoft. You have BA on Wednesday. You have Now on Wednesday. And you have Tesla on Wednesday. Now is big because of services. Again, Microsoft also has a lot of services as well. And so that whole sector is gaining a lot of steam and essentially taking advantage of this market. Netflix obviously done well, so you're starting to kind of see services again pulling away, and all kinds of services. Something we talked about before, that services, rental units, credit cards, right? All those, which we do have a lot of credit cards this week as well. So you got Visa and MasterCard on Thursday. That's why they're on here. I want to see what they're reporting and what their growth rate is continuing to be. So they're interesting to watch. Not to really say that Visa and MasterCard move markets, but it's important to watch what's happening there because, again, it feeds into our thesis that is currently being established. So, and then with that being said, again, these aren't all earnings. There's a ton of earnings this week. these are the particular ones I am watching. I think these ones I always normally typically play, and can be big movers and will move the market. So that's why I put these ones up here in particular. Watch list again. SPX is jumping up a little bit. Tesla, obviously, they're pricing a lot in. It's been because Tesla's been floating roughly around that 7. Apple hasn't really changed much. Apple will have earnings the following week, I believe. BA has jumped quite a bit. So this is what I talk about. If you know what essentially the average priced in move for the options are, it will help you. So when you come into that week of earnings, yeah, well, they've added, like Tesla per se, I think is roughly around 7. So you added about another, 6 onto that to try to price in what could potentially come. $6 priced into that. So as you can see, the price adjustment is pretty big there. Only on particular ones. SPX doesn't really have a lot of moves. SPX won't have a lot priced in until you start talking about monetary policy. So we'll watch SPX next week, as XPX could jump dramatically by next week. Again, roughly we're around what average is for XPX. So unless there's some really big misses by Tesla and BA, again, they hold a lot of weight. Then you can see a big drop. We've seen the banks have reported some really bad numbers again, but when expectations are so bad, right, like the market is going to pump off of any kind of hope that a company may suggest. But like the things that we just talked about in the beginning of this video, and to right now with these companies, things are not good. Things are going to get a lot worse before they get better. Again, not saying the market can't rip away, but we need that bigger catalyst to play out. I think in my mind, before we have a true pivot, I think we can have a true pivot before the Fed actually pivot. But the problem is we need this thing to buckle and break first. So that way we know for sure that we can pivot there, or else you're essentially walking on eggshells. The higher and higher up we push, before it breaks and traps a lot of people, is my concern. So that is essentially that. There's not really a lot going on. Big earnings week with no real big events this week. Not saying that there can't be. Again, the whole Powell thing could be a whole black swan thing that you really want to kind of watch out for. So let me actually take the studies off of here so it doesn't, you can see this a little bit clearer. So come Friday, again, this move, we had a massive amount of selling. Again, that was due to essentially Hopium Dreams being crushed by a 50-point basis move and Powell having COVID as well. So that led our week off to where we started selling off pretty heavy. Then again, Friday, we had this huge spike. Again, I think this is short covering because, again, your end of cycle, this is what these red dotted lines are for. So you have option expiration, big option expiration dates. So again, you have to understand that, well, markets is going up. So, well, why didn't it sell off? Well, it's also showing that people are buying a ton of puts. So that's essentially option covering on Friday. Where typically when you have option expiration would sell off because a lot more people are buying calls, right? So with that being said, the short covering on Friday essentially led to the pump, so that you can't feed into that. That's that everything's gonna be fine and dandy. You did have, again, Fed member talking on Friday about how things were all hunky dory, but he was very conflicting in this is the way he was talking, as he would say something and then contradict what he had just said, and then say something positive and then contradict what he just said, and then say something positive and then contradict what he just said. So it was pretty entertaining to watch nonetheless. But nonetheless, we'll see where we open. Again, bulls, if you want this thing to really break out, it needs to break over that 420 mark. And again, that just puts you into the next 100-point range. All right, the 4100 has also held us down, but this could be a lower high here. Again, this trend line has been our worst enemy for the past year. So we have to see, again, in my opinion, I think we're going to float around here until we could get Microsoft. So I wouldn't actually be surprised on Monday if we start selling back off, back down to that 3,900. And and then kind of just play this range until we get into monetary policy again, unless there's a big event. Some really great earnings or some really bad earnings will break us, I think, out of this 100-point range. Again, my feeling is more so we're going to break down. I think we would break more so down than we would up, just in preparation for the following week with monetary policy as well. So just have to wait and see there from that point. So again, 100-point range, 3,900. 4K mark is essentially, I don't see us really breaking out of that this week, I guess, unless expectations are really beat or worse there. So let's take a look at Bitcoin. Bitcoin, big breakout. I know a lot of people are super excited about this. Again, you have to be very careful. We're at the top here at the 22. Not saying we can't pump up to the 25. But again, that option covering, I think, leads into a lot of hopium that's not really there. So we'll see here. But again, like something I've said is you really have to be careful with these pumps. It's not saying that Bitcoin will break away. I think at this point it probably could. Again, the whole FTX thing, the market held for Bitcoin very well. So wouldn't surprise me if this does start breaking away from the markets. But again, you have to be careful. Again, even though it's broken out, doesn't mean anything. The market has done that plenty of times before and broken right back down. So just be mindful of that. The dollar, again, for the bulls, this is looking really good for the bulls. We'll see if this continues down or not. But again, bears, you want this thing to break back over. Again, for the bears, you have to understand, even myself, and even though I have that catalyst, I don't know when that catalyst is going to happen, right? I can keep coming on here and saying, but I'm just saying that you need to be mindful. And this is why I talk about risk management, because if this event that happens and buckles, it's getting close, in my opinion. We don't know when it's going to hit, but if it hits, if you have risk management, you'll be fine. If you're investing 5-10 years and you're not concerned about the money that you have invested and you don't need it for the next 5 to 10 years, then it is not a problem. But my problem is that people are expecting it to just do a move quickly. And yes, I play intraday. Yes, I play swings. But your risk management has to be on point if that's what you're doing, is what I am telling you. So that being said, we'll see. But the dollar, again, looking weaker, which is good. Still need it to break below 100 just to be safe and start feeling more bullish about the markets. But again, there's a bigger catalyst that's going on that I don't really see it that way, but we'll see what happens. Tesla trying to break out again. The break and the retest, technical wise, this is perfect. We could get a nice pop up to 153. Again, we have earnings. There's big move expectations. Wouldn't be surprised if we hit 152 before earnings, and then see what earnings does. Earnings could very well drop us, but you do need to break above this high here, which is roughly around the 137. If we can break above that, I think we get a pretty clean shot up to the 152. So watching Tesla, obviously they have earnings again on Wednesday, so we want to see how they do. Again, there's a lot priced in, so you got to be very careful. A lot of times with these, what I try to do is wait till earnings, after earnings. So on Thursday will be the time to play it, because all the premium dies off once the actual earnings happens. It's trying to play before earnings that could really mess you up. And again, they price a lot in. So keep that in mind. But after earnings, then the premium dies down. Don't jump right in on Thursday morning, because there's a big premium adjustment going on Thursday morning. So just keep that in mind. Let that kind of burn off and adjust, and then take position from there. Apple, interesting move here. Technical wise, you had a break. This could be considered a retest. The thing could roll over and start selling. Again, Q4 for Tesla and Apple are going to be really important, because there's been a lot of lockdowns and drama going on in China. So we want to see how much of an impact that's actually had on them moving forward. Yes, they're making plans to move out of there, which is great, but point being is this Q4 earnings is it's going to be impacted because of it. So we're waiting to see how much of an impact that does have. But if this thing does want to keep pushing, again, your next level up is about 141. And then if this thing again rolls over, you get a retest the 131, and then kind of watching that 126 there. And now is a big one. They've done very well on earnings, so keep that in mind. Services done very well. I want to see how this does play. It has this massive run. This is what I'm talking about, essentially earnings run. That's a nice earnings run that you would typically see in a lot of other stocks. Services is doing extremely well, so I want to watch to see how this does do. It is battling roughly that 437. The question is do we open up back below this thing and kind of sell off to the 417, and then once we have earnings, maybe break out even higher? So I do want to keep this one on watch because of their earnings. They've done very well, and their customers. There's good feedback from their customers as far as return customers. So that is something to consider when you are looking at services here. So I want to keep this on watch this week. I don't have the prices for this one because it's not a regular. I just like to keep the industries, the same industry ones up there for this week. So you can look into the options and see what's priced in for that this week. And then we got BA. BA has earnings on Wednesday. Again, this thing has kind of had a ceiling here at the 212. Again, absolutely parabolic move here. Again, BA always loses a ton of money, but it's backed essentially by the government. So we'll see what happens here. I'm sure the numbers aren't going to be any better than it already is after all the money they're losing. But let's see if it's enough to start taking this down. Again, it's been a big value play. It's gone up roughly around Q4. This whole thing's gone essentially parabolic. We'll see if this can get some sort of correction going into this year. Again, right after big earnings, you have to be mindful that you start playing with a normal cycle of when the market just naturally sells off pretty heavy. So we're going into that cycle. So you need to be careful coming into February and March because it's our normal cycle of selling off. See if we can get a bigger catalyst to sell this off even more. So I think you really have to be careful about buying into any pumps at this point as just based off of our normal cycle. JPM. JPM, again, battling at ceiling at essentially the 143 and playing this range to about 130. You don't want this thing breaking back down below 130. Goldman Sachs reported a horrible to open up last week. And then also to come and find out that Goldman Sachs, the Federal Reserve, is essentially doing a deep dive or probing Goldman Sachs as well. So that's something you consider going into the next coming weeks. If some of these banks in value start really rolling over, that's going to put more increased stress on sell pressure to the downside. And then if you get some bad big tech earnings with Microsoft and Tesla this week, Tesla and Microsoft really haven't been great. They've been getting beat up pretty heavily. So again, if your value and banks give up, then the market's in trouble as we'll start selling off again. So we'll have to see how that does play out. But that's pretty much what I got for this week. There's a lot to digest there. I try not to make this video too long. But these weekly videos, there's been a lot of information floating around I need to stay on top of. And that's what I'm here for, is try to have an update on this stuff. I know even for myself, it can become overwhelming at times, but just try to keep it simple, keep it basic, look at certain things, kind of know what to watch. Again, the time in the market will kind of allow you to see what really matters and how some things play out and some things don't. So nonetheless, this is where we're at. Big week ahead for earnings. Again, it's good to not have any other events going on when earnings are going on, so that way we kind of dissect these earnings a little bit better and kind of understand what's going on. I like these weeks the best because there's not a lot priced in the general index, and we'll see that next week when we have monetary policy. There's normally a lot bigger move priced in next week for the general index. So Again, if Microsoft or Tesla does poorly, BA does poorly, again, it could have a big impact on the market. So that being said, you made it this far. Go ahead and drop a like button. Until next time, I'll see you guys later.